About multi-baggers in stocks,
Mhm.
there have been many hundred baggers in mutual funds too.
What is your take on sectoral funds?
I'm worried. Stupidity, greed, and fear are three reasons why most people will never be able to create wealth. That was the reason why I wanted to be that one idiot and say, किसी दिन मैं 100 crores मैंने सारा बनाया through mutual funds. Now most people seeing this podcast may be wondering कि आज all time high है. He's saying to put everything today. In 4 years, I invested around 37 odd lakh in a PSU fund. It became 94 lakhs in 4 years.
When I go and open up any portal, there are tens of categories of mutual fund. So how do you navigate and what is the right framework or right approach to build a mutual fund portfolio?
Meet Gajendra, the co-founder of Etika Wealth that manages over 2,000 crore of AUM.
Hi Gajendra, welcome to Power Academy. Thank you so much for taking out the time.
Absolutely.
Yeah.
Thanks, Navda. So my brush with mutual funds started way back in 2004. That time, when I joined this industry, before that, I didn't know anything about mutual funds. Even after spending first 6 years, Navda, in UTI from 2004 to 2010, I knew the theoretical stuff, but it didn't get into my head, that this is such a powerful vehicle. Only back in 2010 when I started my SIP of 10,000. And the result of which actually started seeing after 2020-21. So it actually takes 10 years for you to see meaningful outcome from your investments, right? It is very safe. Now, many people think mutual funds is equities. Equities means risk. Yes, of course, equities means risky thing. But when you invest in a single stock or a couple of stocks, and if your selection is not very right and you end up investing in a very BC category of stocks, you may end up losing money. But in mutual funds, when you're investing in 50 stocks, 60 stocks, the fund manager invests on your behalf.
Right.
And remember that this is run by a professional fund manager. So
Yes.
they are not going to really put in Dutch stocks, right? So you will never end up losing permanent capital. And one more thing, Navda, is that in India, the mutual fund track record is for 30 years. So you can always go back in history and check how the funds have delivered. Plus, not just in India, in US, the history is more than 100 years old.
Right.
And this is a worldwide phenomenon now. So, and in our country, the regulator is superb. SEBI, which many of our viewers may not know, they're doing an excellent job.
No, absolutely.
Can put in and can forget for long term. And one fine day when he opens, I think it will be, pot of gold he'll strike. I've realized that in India or world, when it comes to stock, this thing, you talk about Warren Buffett, you talk about Charlie Munger. In India, we talk about Rakesh Jhunjhunwala, Ramdev Agarwal. But if I were to ask you, have you met someone who has created reasonable amount of wealth through mutual funds?
No, absolutely. I think just the right note where we wanted to start this podcast. One thing that we observe, and the trend is also showing that AUM usually follows the return. So I think that's what the equity mindset is. जो भाग रहा है उसमें पैसे डाल लो. What are the top mistakes that you have seen in your clients or in your personal journey as well,
Yes.
with respect to mutual fund investing?
100%. It's very, very, very interesting topic, and I'm sure it's very relevant in today's context. So there used to be a fund manager called Peter Lynch. He had run one of the most successful fund in the history of mutual funds in US called Fidelity Magellan Fund, which for good 11, 12, 15-year period has given 20% plus compounded returns,
Oh, wow.
which in US was crazy, right? So he always used to say that my fund has given returns, but my investors have never made returns.
Oh, how?
Because whenever his fund was doing top of the charts, a lot of money would chase the performance and he would get far higher AUM. And when his fund was not performing in between, all the money would go out. So the money came in at the wrong time, the money went out at the wrong time. Right? Net in the long term, funds gave good returns, but none of the investors made.
Ah.
They never stick to their philosophy. So what mistakes people make? Generally in good cycle, people become very greedy. See, I'll tell you, Albert Einstein used to say the whole world is full of people of three kinds. There are stupid people, greed and fear. Stupidity, greed and fear are three reasons why most people will never be able to create wealth. So I have a guru by the name Nick Murray.
Okay.
He's based in US and he's 82 years old. He has a very favorite line. He says, human nature is a failed investor. Okay? Humans on their own will not be able to create wealth unless they are advised in a right way. Because
Our
of
own
our
biases,
emotions.
yeah.
Our own biases,
Yeah.
emotions play. We are living in euphoric times. I
Yeah,
have seen my
absolutely.
investors' portfolios. They were happy with 12% return. Today, when they're seeing 18% return, also they're saying Gajendra maza nahi aa raha. Can you give me
Greed.
25%? Greed.
Yeah.
And we know that this is bound to happen. This is not the first time we are seeing this cycles. There are plenty of examples that people have lost money due to this greed. So the biggest reason is greed and fear. The second reason that we are now seeing is FOMO factor, fear of missing out. The wealth is also relative. You have to understand. If you are making 15% return, that's a classic, a good one,
Yeah.
right? But if your friends are making 20% returns, how can you stay quiet? You need to kind of topple them, na? That is becoming a big problem. So people now are checking their portfolios and comparing with their peer groups, and if they are seeing that their portfolios aren't doing well, they want to change it. So that's again becoming a second worry. Third is people now want instant results.
Yeah.
They don't want to wait for 4, 5, 7 years. They want to see in 2 months, 3 months, 6 months. And that is why, like PSUs, we saw defense, all these things, a lot of money is coming to this sector, this space. I always ask people, what is finance 101? The number one rule in investing: buy low, sell high. What do people do? They do the reverse. They buy high, they sell low. People wanted to sell in pandemic and they are right now queuing up to buy. So it's against human nature. Now, if there is a sale in Kormangla or Indranagar, suppose there is a 30% sale, maybe you're going to buy one dress. If I say that sale is now 50%, you'll buy two.
Yeah, even though I might not need it.
You will not. I know. I knew. And if I say the sale is 80%, you'll buy 5 others, 5 more.
Yeah.
You'll give to other people.
I don't do that when markets do that though.
Exactly.
Yeah.
Why don't people do the same when markets are giving this opportunity? The best of companies, the best of funds are available at 50-70% discount. Why don't people buy? And so once you've tasted this, once you've understood this, if you've gone through one cycle and you've learned from the mistakes, then I hope you're not going to repeat the same mistake in the next cycle.
Right.
But most people are yet to see this happening.
Yeah. No, I think you spoke about, if the market is low, go invest even more,
Yes.
To take advantage.
Which is what I did
in the
March
COVID.
2020. See, I'll give you my timeline. 2004, the first day of my career in Bombay, May 17, 2004. मैं ऑफिस आया, that day markets fell 17%.
Oh.
Because NDA lost elections, UPA 1 came into power, and markets didn't know what to do. 17% highest crash on Nifty. And when I came to office, I saw सबके मुंह लटके हुए हैं. Everybody were dead serious. I was wondering, have I joined the wrong industry? इतना fearful था. But then that was the bottom, and then you saw the classic 2003 to 2007 ka bull rally. One of the biggest bull run of our time, right? Sensex went from 2-3,000 to 21-22,000, okay, in 4-5 years. I missed that. पैसे भी नहीं थे, अकल भी नहीं थी. I missed completely that. 2007-8, I lost huge chunk of money by gambling into stock market, by playing futures and options. 2010, I started putting through SIP, right? So 2010 to 2020, I kept on doing. So this time when market fell, I knew what not to do. I've become wiser. I've read books by Warren Buffett and many others, wherein they always used to say, be fearful when others are greedy. And so this time around, when market gave me opportunity, I went all in. And now in hindsight, all those investments that I made have gone up by 3-4x.
Yeah.
So I've realized people learn from mistakes.
I think your own mistakes are like the biggest.
They're the best
teachers.
They're the
Yes,
best teacher.
Absolutely. Yeah. No, yes. As a put it, save it and wait for the right time and then invest when the market is at low.
Correct.
What do you suggest? What strategy?
Very tricky question. Very, very tricky question. I'm sure this question is playing in 90% people's mind.
Yeah.
Let me give you my take on this. Again, I know deep down that this may not again be the best strategy, okay? But I'll give you my view. Anyone can make 12 to 14% return by doing SIPs. Every month you're earning money, you keep on doing that SIP. In the long term, you'll make 12 to 14% return. And Navda, that's not a bad return. That's a very good return.
Absolutely.
If you're able to compound at 12 to 14% for 10 years or 20 years, you are going to create massive wealth. Then how do you make 2 or 3% extra, let's say? So I believe that 80-90% of your monthly SIPs you do through this. 10 or 20% keep in liquid. Okay. Whenever there are dips or opportunities in any sector, invest that time. So then you're going to see massive jump, right? Like in COVID, I ended up putting almost 90 lakhs, right? And that has given me 35% CAGR compounding for the last 4 years. So that is one. there is other side of the story also. I have also started to believe that if you have lump sum money today, don't time it. Look at that history of Indian markets for last 40 years. Every 3 out of 4 years, the returns were positive. Only 25% it was negative, right? So you are playing against your odds by staggering it, because every next installment that you are going to do is going to go at the high level. So if you have lump sum today, the smartest strategy is put in all today and don't touch it for next 10 years. Because 10 साल में तो यहाँ से double या triple या 4 times होने ही वाला है.
Yeah.
So if you keep on kind of timing, you will never be able to put. आज वो 30 lakhs 82,000 लेवल पे भी जा रहा है. I'm not putting my head into it, you know.
Yeah.
तो इसीलिए wealth बन रहा है.
Absolutely.
अगर मुझे आज ये lump sum डालना होता 30 lakh, I would be worried कि I'm putting all money at 82,000 top. कल को ये 10% crash हो जाएगा तो I would have never done. I could have never invested then. But because it is in SIP, I can't do anything. It has to go means it has to go.
Yeah. No, absolutely. I think very fair point. So, I think all convinced that, you know, the control over emotion and, you know, just doing SIPs the right way is the key. Now, for an investor, like a retail investor, I think when I go and open up any portal, there are tens of categories of mutual fund and then subsequently mutual fund schemes as well. So, how do you navigate and what is the right framework or right approach to build a mutual fund portfolio?
Fantastic. Let's take a top view. Broadly, there are 3 categories of mutual funds. One is debt or fixed income. Second is hybrid, which is a mix of equity and debt. And third is pure equity. If you're a first-time investor in mutual funds, start with debt funds, which is more like proxy to your bank FDs, savings account. Here, you're not never going to lose your capital. So you'll get 7%, 8%, 6% kind of returns. Try with that out. So at least you understand how mutual fund works. Put in money, after a week, 10 days, pull out money, you will understand. If you want FD plus returns, so FDs give me 7, but can I get 9 or 10? Then there are these hybrid mutual funds. So hybrid is what? Equity plus debt. Hybrid also means equity plus debt plus gold plus silver, like multi-assets.
Okay.
Okay. So you can get anywhere from 7-8% to 12-13% return depending on how much equity you mix in that hybrid.
Okay.
The more equities you mix, the more kicker it will give, the more volatile it will become.
Okay.
So equities can range from 10-15% all the way to 70-80-90%, right?
Okay.
So if you want 9-10% kind of return, you may mix maybe 30-40% equities into your debt, and the combination will give you 8-10% return.
Okay.
Even that's a very good return compared to FDs, and that will be much less volatile because of this thing. But the moment you say, no, look, I am not happy with 10%, I want 12, 13, then you have no choice but to go in pure equity funds. 100% equity funds, they will be completely volatile and can give you around 12, 13, 14, 15% depending on, again, risk profile within equities, which we'll discuss later.
Right.
Broadly, you have to decide between debt, hybrid and equities. So debt is generally for 6 months, 1 year, 3 year. Hybrid is for anywhere from 3 to 5, 6 years. When we are talking about equities, I'm talking about 7+ years.
Okay.
The best way to start in equities is generally what we call passive funds or index funds.
Okay.
These are no-brainers. Now, if you're new to equities, just put your money in Nifty 50 index fund, which means your money is going in top 50 companies of the country.
Right.
There is no fund manager who is managing that. It's exactly replicating that index, right? So if index goes up by 15%, your money will also go up by approximately 15%, and so on and so forth. The beauty in index fund is that there is nothing called underperformance or outperformance because there is no fund manager. You're not competing. You know you're roughly going to get the Nifty returns. But if you have an advisor and if you have a little more high risk profile, then again you have plethora of options. You know, you have large cap mutual funds, you have mid caps, and you have small caps.
Yeah.
Right? So in India, the way SEBI defines large cap is top 100 companies by size, by market cap, are called large caps. Between 101 to 250 are mid caps. And anything below 250 is small cap. Right?
Right.
So mid caps will be more volatile than large caps and will give you maybe 1-2% higher return than large caps over a 10-year period. Small caps will even be far more volatile than mid caps and can give you 1-2% higher returns than mid caps.
Yeah.
Right? As we speak right now, most of the flexi caps are fully large cap or 70% large cap.
Okay.
Maybe they think small caps are expensive and that's why they're in large cap. Or even if the size of the fund becomes huge, they have to be in more of large caps.
Okay.
That is why SEBI, I think 3 years back, came out with a category called multi-cap fund.
Okay.
Wherein SEBI said that 25% of money has to be in all the 3 caps minimum.
Okay.
25% large cap, 25% mid cap, 25% small cap. 25% is discretion to the fund manager कि he can put in large, mid or small depending on what he wish. So I think this is one category which truly reflects the full market. तो अगर आपको पूरा market खरीदना है and you want an active fund, multi-cap is the best choice. A dividend yield fund will invest in those companies which gives very high dividends, right? So generally the companies which are far more stable companies, they give high dividends. So when you are investing your money in dividend yield fund, you want to invest your portfolio in safer lot of companies, right?
Okay.
Generally we recommend to invest in dividend yield companies when markets are all-time high.
Okay.
Or when markets are very expensive. So at least you are buying a safer set of companies. So tomorrow if market falls, these companies will fall much lesser.
Okay.
Then there are funds called contra funds or value funds, right? Certain set of companies that have not performed in the market. And they're very cheap. Market is expensive, but these companies are trading very cheap for some company-specific reason or industry-specific reason. So for the fund manager, identify those companies and put in. Hopefully that, in next 3 years, 5 years, when the story plays out, you will make a lot of returns. My 4-year CAGR, CAGR on SIP in PSU fund is 56%.
Wow.
I was putting some 1,50,000 per month. So totally I would have invested around 37 lakh. I started with lesser amount and then 1,50,000. So in 4 years, I invested around 37 odd lakh. It became 94 lakhs in 4 years, giving a 56% CAGR.
I think classic example of you took a risk, it gave you return.
Yes. I mean, I never expected it will give me this outsized returns. It was luck also and many things. Because last 1 year, 2 year, the returns went through the roof. Now I felt ki boss, this is like peak, I don't think it is really. So I pulled a good amount of my money from that fund and put into another sector which has not performed that great.
Okay.
So when you're putting your money in these kind of contra, timing matters. When to enter, when to exit matters.
Right. So it's being very active,
Very
following
active.
those sectors.
For most common investors, it's very hard to do.
So what is your take on sectoral funds?
No, I'm worried. I'm really worried because I know this part is not going to end well. Because in the past also it has not ended well. So when a lot of retail investors come into sector funds, actually sector funds are not meant for retail investors. They're meant for very informed investors who understand this risk. Because as I said, in any sector fund, if you have to make huge money, your entry exit both has to be timed well. And a lot of luck also plays a big role. Okay, there is category called business cycle fund.
Okay.
Or they are called thematic fund of funds.
Okay.
Which means the fund manager would invest in 3 or 4 sectors.
Okay.
Which are not performing right now. Okay. So at any point of time in the industry, there would be 3 or 4 sectors which will not be performing.
Okay.
So fund managers will take a contra call and invest your money in those sectors which has not performed well.
Okay.
And when these sectors have performed, some of these sectors, they would rotate money by pulling out from those sectors and putting into another sectors which have not performed. Mutual fund have funds wherein the fund manager will put in banking fund, pharma fund, auto sector fund. And if they have realized that banking has performed well, they will put out money from banking fund within that fund of fund and they'll put in another category or sector fund. In a business cycle fund manager consciously invest into those themes or cycles that have not done well.
So, Gajendra, so many learnings for our investors across, emotions, portfolio. Coming from your journey, like how your SIP journey has been and what does your portfolio look like right now?
First of all, I want to make a disclaimer that this is not an investment recommendation to our viewers. A good amount of my family money, 35-40% is in multi-cap kind of funds.
Okay.
60% is on the more aggressive side, which means lot more small cap funds, decent amount of mid cap funds, and a huge amount of sector funds.
Okay.
Now, how do I do? So I started with 10,000 SIP. My first SIP, a part of the SIP was in a small cap fund.
This is which year?
This was 2010. So 5,000 rupees SIP that I did, 8,45,000 is what I put in last 14 years. That is about to touch 50 lakhs.
Wow.
And it has given a compounded return of 23% for the last 14 years.
Wow.
At a point in time in Jan 2018, this fund was giving a return of 32% compounded return. In COVID, this return came to 5% compounded return for 10 years period. And now we are clocking 23%. Of course, small caps are very high right now. That's why you're seeing this. The other thing is, a lot of my money is in sector funds. Somehow I have learned how to time the sector well. I invested a lot of my money in PSU when PSU was not doing well. I invested a lot of my money in auto sector fund in 2020. In 2019, pharma was going through a rough patch. I ended up putting a lot of my money in pharma. Today, I see the same thing trend happening in banking sector. Last 4 years, banking has not done well.
Yeah.
I am putting personally a decent amount of my money in banking. मैंने PSU से निकाल के banking में डाला है. So I always play contra. Until last year, my SIP was 22 lakh. तो अगर इस साल मैंने 8 लाख और बढ़ाया per month. So I see at this time which is the cheapest sector or opportunity, and that is how I decide my next investment.
Got it.
Personally, अभी मैंने एक lump sum investment 50 lakhs I put in China.
Okay.
Right, because everybody's talking about India story and everything, but the price is already reflecting that also. It's not cheap, but China is dirt cheap. Again, I'm not recommending this to anyone. This is a investment that can play out, that can take 10 years also, and yet also not play out. And wait करेंगे 5 साल 10 साल बाद भी अगर आया, I'll make good returns.
Yeah. So wrap this section. Thank you so much,
Thank you.
Gajendra.